Hello everyone and welcome back to the channel, and I hope you guys are doing great. In my today's video, I'm going to discuss with you about a company called Nureca Limited. We're going to discuss their recent Q1 FY27 result, go through the numbers and see what the management is saying and what we can understand from it, and how their turnaround journey is spanning out, right? So please stay tuned for the whole video to get all the details, right? So if you look at the business model in short, right, they sell these self-health monitoring products mostly online. If I take few examples of it, right, they have digital BP monitors, massages, pulse oximeters, humidifiers and steamers, nebulizers, right? So you can read at the bottom all the products that they sell. So majority of the products that they sell is through their online platform, and very few through the shop. So this is their whole business model, and that's how they make money. And if you look at their recent result, right, for Q1 of FY27, right, so the revenue increased by almost close to around 18% YOY to 40.3 crores. And at the same time, if you look at the gross margin, that also improved by almost 6% to 38.8%. And if you look at their operating profit, right, it grew by almost 8.7% to 3.4 crores. And if you look at the reported how to say profit before tax, it was around 4.43 crores, and the profit that they made was around 3.1 crores. And if you look at their overall debt to debt, right, they do not have any debt. They are completely debt free, and the net cash and investment they have with themselves is around 110 crores. So, and one of the things the management said, right, this is one of their best quarterly sales that they have done in the past 16 quarters. So that means things are improving for them. But once we see all the thing, but we'll come to a conclusion whether it is improving at a much faster rate or even at a quite slow rate. So let's get further into it. If you look at this whole PNN summary consolidated, I've just taken this so you can look at the screen, right? So one of the things that I want you to look at, if you look at the profit before tax, it has increased by YOY to almost 238%. PAT has increased by almost 244%. And if you look at their gross margin, you can clearly see from 35 it has increased to 39%. Operating margin is also improved from 1.8% to 8.7%. EBITDA has improved from 5 to 12%, and PAT has improved from 2.4% to 7.4%. So if you look at all these parameters, right, one thing we can definitely see, right, the business is heading in the right direction, right? Because it's not just the sales which has improved at a decent number of 18% per growth, but the overall profitability numbers are also getting better and better, especially from the gross margin to operating margin to EBITDA and to PAT level. So that is actually quite a good sign. And I want to just share this KPI trend, which they had given in the how to say in this presentation, right? So just to see how things were and how things are changing. And if you look at their revenue from operations, right? If you look at this table, right? If you look at the best was 21-22, where they did a revenue of almost 255 crores. That's when things went down, and they have started recovering slowly. Slowly by slowly. So we have to see how things will improve. And if you look at their gross margin also, right? At the peak of 21-22, they had a gross margin of 48%. Then it came down to 32, and now slowly by slowly it is improving, trying to reach that level. And if we look at the EBITDA margin, they had almost 24% of EBITDA margin at the peak of 21-22, which went down to -7% in the next year. And now slowly by slowly, it has again come back to positive at 12%. And if you look at their earning per share, right, that is where the major disaster happened. On the in 21-22, they did a earning per share of almost 45 rupees. But after that, it just went southward, which is -8, and then slowly, but it has grown. But if you compare to the number which they had at 21-22, it's not even close to 10%. So there is still a long way to go for the business. And the other thing, what the management said, right? See, earlier, if you look at if you can go and study this business, earlier they were completely dependent for these products, and they used to import it, right? So any change in fluctuation of of the exchange rate and everything impacted very negatively on them, and obviously they cannot control the whole supply chain because everything is imported. So now what they have trying to do is, right, they are trying to set up their own manufacturing facility in Punjab, where they want to manufacture this product in house, right? So they will have a better control over prices, over raw materials, and over the whole supply chain, and that's what they are betting on, right? So what will happen? they in that way they can improve their overall operating margin, and the of how to say, the foreign exchange fluctuation will not affect them in a very negative way. So we need to see further update how things are progressing and how it is contributing to the overall revenue, which the data I couldn't get from the investor presentation. So as and when I get it, I will definitely share it with you guys. And the last thing I want to conclude is, right, so they had, if you look at the screen, right, so the management has given a chart presentation speaking about the home healthcare product markets in India and neighboring countries, right? So over here, if you see, right, the market is quite huge. So as of now, last year 2025, the market was around 3,240 crores, and by 2030, it is almost going to be, grow to almost 5,200 crores. And if you look at their how to say, overall overall contribution, right? So over here, if you look all the products which they have mentioned over here, they sell all these different kinds of products, right? So the companies there, and if you look at the overall CAGR growth that they're saying, it's 9.9%, which is quite small. So in terms of the overall, the industry might not go at a high pace, but the opportunity for Nureca is quite high, because if you look at the screen, right, the market right now is 3,240 crores, and the potential is to grow to around 5,200 crores. And if you saw earlier, right, the overall revenue that they did was 146 crores last year, which is not even, how to say, 10% of the overall market share of 2025, right? So even though the overall, how to say, the overall market for this home healthcare products might not grow at that high rate, but the share for Nureca is quite small. And if they're able to capture that at a very high rate, right, then they can do something really great. But the challenge for them, I personally see that right now, even though they are recovering, right, yes, they are becoming profitable, margins are improving, but the sales growth rate for such a small company is quite less. They have grown only by 18%. I think that's where they need to improve and work on it, because if they're able to increase the pace of sales growth, I think overall it will have a very good impact. So that's what I personally feel, and the way I see it, right? So they are on their how to say, turnaround journey, but the turnaround journey is not completed, and it is going at quite a slow pace. I would have expected that it could have gone at a much faster pace, because they have done these things before. But let's see how things progresses. I'll definitely keep you guys posted, and if you guys like this analysis, please do hit like and subscribe to my channel. Thank you, and God bless you.